If you've been watching the economy and feeling uneasy about where to put your money next, here's something worth considering. While everyone's talking about the latest tech stocks or trying to time the market, there's a quieter story unfolding in an asset that's been storing value for thousands of years. I'm talking about silver, but not the kind you need to lock in a safe or worry about storing. We're looking at silver exchange-traded funds, and the case for them right now is more compelling than most investors realize. In this video, we're breaking down why silver ETFs might be the missing piece in your portfolio. We'll look at what's driving silver demand right now, how ETFs solve the biggest headaches of owning physical metal, and why they beat out other silver investments like mining stocks. Stick with me, because understanding this could really change how you think about protecting and growing your wealth over the long haul. Let's face it, investing these days feels like navigating a minefield. Inflation is still eating away at your purchasing power, even though it's cooled from its peak. The market swings wildly based on whatever economic report drops that week. And traditional portfolios that worked for decades are showing cracks under this kind of pressure. When both stocks and bonds can take a hit at the same time, you start looking for something different. Something that can actually hold its ground when other investments are struggling. This is the challenge every smart investor is trying to solve right now. How do you build a portfolio that doesn't just grow when times are good, but actually protects you when the economy gets rocky? That's where silver comes into the picture. Silver has been real money for centuries, right alongside gold. When people lose faith in currencies or worry about the economy, they've turned to silver as a store of value. But here's what makes silver particularly interesting right now. It's not just a precious metal you hide in a vault. Silver is also a vital industrial commodity, and that gives it two completely different demand drivers that don't move in lockstep with the stock market. On one side, you've got the monetary angle. When investors worry about inflation or currency problems, they buy silver as a safe haven, just like they do with gold. But on the other side, silver is an industrial powerhouse. According to recent research from the Silver Institute, silver demand from technology sectors is poised to accelerate through 2030, driven by solar energy, electric vehicles, and data centers supporting artificial intelligence. Think about solar panels. Each one needs silver for its electrical conductivity, and the European Union alone is targeting at least 700 gigawatts of solar capacity by 2030. Then there's electric vehicles. Battery electric vehicles consume on average 67 to 79% more silver than traditional internal combustion vehicles, using approximately 25 to 50 grams of silver per EV. The Silver Institute forecasts that global automotive silver demand will increase at a compound annual growth rate of 3.4% between 2025 and 2031, with EVs overtaking traditional vehicles as the primary source of automotive silver demand by 2027. This isn't speculation about what might happen. This is a structural demand that grows regardless of short-term market sentiment. As the world shifts toward green energy and more advanced technology, silver demand keeps climbing. That blend of defensive, safe haven appeal and growth-driven industrial demand makes silver uniquely versatile in today's economy. So if silver is the answer, why not just go buy some bars or coins? That seems straightforward enough, right? Here's the problem. Owning physical silver comes with headaches that most people underestimate. That's where silver ETFs really shine as a better option for most investors. First, let's talk about liquidity and convenience. A silver ETF like the iShares Silver Trust or the Aberdeen Physical Silver Shares ETF trades on the stock exchange, just like any other stock. You can buy and sell during market hours with a click through your existing brokerage account. Need to rebalance your portfolio or take profits? It happens instantly. Now compare that to physical silver. You've got to find a reputable dealer, verify the purity, and usually accept a price below the market spot price. The whole process is slow, inconvenient, and cuts into your returns. In a volatile market, that lack of liquidity can really hurt you. Then there's cost efficiency. When you buy physical silver, you're paying a premium over the spot price, typically 2 to 5% or even higher during peak demand. Plus, you need secure storage, whether that's a safe deposit box or a specialized vault service, and you need insurance against theft. These costs add up fast and eat into your returns year after year. Silver ETFs eliminate those headaches. You don't worry about storage or insurance costs because the fund handles all that. There is an annual management fee, what's called an expense ratio, but it's typically low. According to recent market data, the Aberdeen Physical Silver Shares ETF charges 0.30% annually, while the iShares Silver Trust charges 0.50%. When you calculate the total cost of ownership over several years, ETFs usually come out as the more economical choice. And finally, there's accessibility and scalability. With silver ETFs, you can start small. Buy just one share if that's all you want. Test the waters without a huge upfront investment. As your portfolio grows, you can easily add more. This makes silver accessible to everyone, not just investors with deep pockets. Another popular way to gain exposure to silver is to buy shares of mining companies. The logic seems sound. If silver prices rise, the companies mining it should become more profitable. That's true, but investing in miners comes with its own set of problems. Mining stocks are essentially a leveraged bet on silver prices. When silver soars, mining stocks can deliver impressive returns because their profit margins expand dramatically. But that sword cuts both ways. When silver prices drop, miners see their profits vanish, and their stock prices can plummet even faster than the metal itself. Plus, when you buy a mining stock, you're not just exposed to silver prices. You're taking on company-specific risks, such as operational issues, management decisions, labor strikes, and geopolitical instability where they operate, as well as the volatility of the broader stock market. A silver mining ETF like the Global X Silver Miners ETF can diversify some of that risk, but it's still an investment in equities, not a direct holding of the commodity. A physically backed silver ETF, on the other hand, gives you pure, direct exposure to the silver price itself. The fund's goal is simply to track the spot price of silver. No leverage, no company drama, just the metal. For investors looking for a true hedge and a reliable store of value, a physically backed silver ETF provides that direct exposure without the added layers of risk. I want to hear from you. Which method of investing in silver makes the most sense for your strategy? Physical silver, silver ETFs, or mining stocks? Drop your answer in the comments below and let's get a conversation going. The information presented in this video is for educational purposes only and should not be considered as financial advice. Always consult with a qualified financial advisor before making any investment decisions. Now let's be real. No investment is without risk, and silver is no exception. Building credibility means acknowledging the downsides, so let's tackle them head-on. The biggest risk with silver is volatility. Silver prices can swing much more dramatically than gold. This is partly due to its smaller market size and its sensitivity to changes in industrial demand. A slowdown in global economic growth could temporarily dampen industrial consumption and weigh on prices. Historical analysis shows that over the past 6 decades, silver has typically been more volatile than gold, with gold showing lower volatility about 91% of the time. Because of this volatility, it's wise to treat silver as a portfolio diversifier, not your core holding. Most financial advisors suggest a modest allocation to precious metals, typically around 5 to 15% of your total portfolio, depending on your risk tolerance and investment horizon. For silver ETFs specifically, there are a couple of other factors to keep in mind. First is the expense ratio, which, although low, will slightly impact your returns over time. Second is tracking error, where the ETF's price may not perfectly match the spot price of silver, although this is usually minimal for large, liquid ETFs. Lastly, there's counterparty risk. the theoretical risk associated with the fund's custodian that holds the physical silver. That's why it's essential to stick with large, reputable ETF providers like iShares and ABRDN, which have solid auditing and security measures in place. By understanding these risks and sizing your position appropriately, you can enjoy the benefits of silver without exposing your portfolio to unnecessary volatility. So let's wrap this up. We're in an economic climate marked by uncertainty, where protecting your wealth is just as crucial as growing it. Silver stands out as a powerful asset in this environment, offering a unique blend of historical safe haven status and forward-looking industrial demand. Its demand is driven by both monetary concerns and technological progress, providing a layer of diversification that's hard to find elsewhere. While you could buy physical silver, we've seen how silver ETFs offer a more modern, liquid, and cost-effective solution for most investors. They eliminate the hassles of storage and insurance, provide instant liquidity, and allow you to seamlessly integrate this powerful asset into your existing investment portfolio. They offer purer exposure to the metal's price than mining stocks, making them an ideal tool for diversification and hedging. Your next investment shouldn't just be about chasing the latest hot stock. It should be a strategic move to build a more resilient, all-weather portfolio. By adding a smart allocation to a silver ETF, you're positioning yourself to weather economic storms while also benefiting from the unstoppable technological trends that will shape our future. If you found this breakdown on silver ETFs helpful, hit that like button and subscribe to the channel for more insights into smart investing strategies. And here's my final question for you. What's the biggest thing holding you back from investing in silver? Let me know in the comments below. Thanks for watching, and I'll see you in the next video.